Hi, everyone. This is Victor Lund from RE Technology and WAV Group. I'm really excited today to have Tom George join me on this webinar. Constellation recently announced that they have a new M&A group. They're acquiring additional technology companies, something that they've done very well for many, many years. And I just thought it would be a good opportunity to welcome Tom and have him talk a little bit about it. So Tom, you're the CEO or co-CEO of Constellation. You want to just talk about the company a little bit and your role in it?
Yeah, sure. So the parent company, Constellation Software, was founded in the mid-90s by, of all things, a former venture capitalist. So we've kind of come full circle now that we're starting to invest in venture. But the founder, Mark Leonard, saw a number of mature vertical market software companies that weren't good venture investments, but he thought could be good businesses to own. So he stepped out of venture. He raised some money from OMERS, which is a big pension fund in Ontario. And he started down the road of buying these vertical market software companies and putting together portfolios centered around different industry groups. So today the business is around $5 billion in revenue. We're publicly traded on the Toronto Stock Exchange, about $1 billion in cash flow, and we've completed over 700 acquisitions. We operate in over 100 industry groups. I, along with Scott Smith, manage our Constellation Real Estate Group, which is the part of the business that focuses in residential real estate and related industries.
And you have a term, Craig, you call that?
Yes, we got tired of saying all the words, so we call it Craig for short. And then the new venture group is Craig Ventures.
Okay, excellent. Yeah, because I think when people talk about your company or products and services that are being offered to brokers, I think everybody just calls it Constellation. And I've seen the use of the term Constellation One and things like that, but it's helpful to have that gravity. So you guys have been very active in acquisitions over the years. Can you talk just a little bit about your acquisition strategy overall as it relates to real estate?
Sure. And I'll go over the history as well. In the last 11 years, Constellation Real Estate Group has acquired 20 companies, around 20. Some of them had businesses they'd already acquired. For instance, our most recent acquisition, Top Producer, had bought 5 Street. So whether you count that as one or two is a debate. But anyway, these companies fit into a couple of categories. In the direct-to-agent category, we have well-known brands such as Market Leader, Top Producer, and Zerpal, and a number of others. Constellation One, which you mentioned earlier, is really our enterprise brand that focuses on selling to the top 1,500 brokers and small brokers. And that is a collection of product lines that we've been spending a lot of time selling as an integrated suite of products made up of also well-known brands such as Real Estate Digital, Paradigm Virtual Tours, and Emphasis Back Office. That business rolls up to Andrew Binkley, who's the president, and is a longtime provider of services to MLSs and brokers and associations. We have a set of businesses that sell data and analytics. This was a combination of SmartZip and Offers. There are AVM products there as well as consumer lead data. You can complete your lead with something like a missing cell phone number. We also have an adjacent area in mortgage. Mortgage has been an area that our real estate brokers brought us into. We have a Mortgage Builder, which services a number of mid-market banks, and that is their core loan origination software. It also has a servicing component for some servicers. So we've saturated, we think, our core real estate market, and we're also looking at adjacencies like lending.
That's great. I know one of the new areas that just in our work where we've seen you guys make an entry is that there were sort of a limited set of companies that would do MLS data aggregation for technology companies. And one of the big competitors in that space was WolfNet, who was acquired by Ojo Labs, and they've since exited it. And it really sort of left a hole in the industry that you guys are now beginning to fill. You guys obviously aggregate data across all of the MLSs in North America, both Canada and the United States. So, you're pretty well positioned to that. Does that have an influence on sort of your venture capital? Like you come to the party not only with capital to help a company grow, but you also bring expertise in terms of how to operate businesses effectively that are marketing technology services to agents, brokers, and teams. But you also bring this ability to sort of be a better partner. I know that, in the general number that's tossed about for the cost of aggregating data across North America is about $5 million a year. Once you do that once, you can hydrate any application with it, in accordance with the rules and regulations and data licensing agreements. But, in terms of the day-to-day collecting of data, normalizing of data, and making sure that those data feeds are sound and publishing correctly to technology systems, it seems like you have sort of three pretty strong things that you can contribute to a startup company or a new company or company that's looking to grow. Can you talk a little bit about that?
Yeah, for sure. Data aggregation has become a core competency of ours and an organic initiative that we've been investing in. And I'd like to say that we are brilliant product strategists and we thought of this on the whiteboard and we birthed it. But the reality is that we kept buying companies and each one had their own data aggregation engine. And we looked, to rationalize our operations and narrow it down to fewer data aggregation engines. And suddenly we realized we were in the data aggregation business. And we started approaching, competitors and other players in the market. And it just seems that the current vendors receded at the same time. And here we are, but I think your broader point is accurate. And that is that when we look at these venture businesses that we want to invest in, we do think that there are assets within our current portfolio of companies that we should be able to leverage. There should be know-how, there should be IP, there should be, customer bases. And, in fact, we really think that the majority of ideas that we will end up funding, will come from our existing businesses or, staff in our existing businesses. We still want to look at external parties, to make investments, but we think we have, probably a sizable backlog just within our portfolio of businesses of stuff they always wanted to do. And the way our structure works, we've always done incremental organic investments to sell additional add-ons to our existing customer base or to extend a product line like the data aggregation into a real business. But there are things that our folks have wanted to invest in that, within the construct of their P&L, they couldn't afford. And this is an opportunity now to bring fresh capital to the table and actually fund those things. And, hopefully someday they become a mature Constellation business. That's really what we'd like to see. And additionally, we'd like to see that entrepreneurial spirit, bleed over into our mature businesses as well.
That's great. So maybe I didn't hear that right, but to some extent, your internal businesses can come and appeal for additional funding for growth as well as external companies.
Yeah, that's right. That's right. Now we'd like those to run as standalone businesses that are not just extensions of the existing businesses. So they have all the DNA of a startup, but we do expect that, and we expect the majority of the ideas to come from those internal groups. We'll see if it pans out that way or not, but that's at least the vision that our CEO has laid out for us.
Well, listen, I know that there are a ton of people who are going to listen to this call and say, I would really like to speak to Tom about my great, brilliant idea or the company that I have, and see if they would consider a partnership or venture capital investment or an acquisition. can you talk a little bit about valuations, like what your buy box is, the kinds of things that you're looking for? Do you shy away from lookalike companies to things that you already have, just so that you don't get inundated with folks that, you know, are not intriguing to you?
Yeah, sure. Well, we've obviously acquired lots and lots of mature companies, and we have a valuation process that's pretty mature for that, a discounted cash flow valuation process. There's a webinar I did last year with my CFO, The Anatomy of Evaluation, that gets into excruciating detail if you want to go and hear about how the tax situation might impact the valuation and things like that. So, you know, that's something we feel like we know pretty well. With these newer businesses, we are newer at it. You know, we have a structure we think works. You know, we see the businesses as, you know, fitting into a couple of categories: pre-product, you know, which is seed round; post-product, pre-revenue, more of an early stage round; post-revenue, you know, pre-profit, which is really kind of moving into growth; and then profitable and growing, and that's really kind of your growth stage. And then after that, you should be a mature business, and it looks like the things that we've historically bought. So that's sort of the spectrum we're defining. And I mean, we think that most of our investments are going to be at those earlier stages for this venture group. We want to continue on the themes that we have already invested in our mature portfolios. If you have an idea for the business that's going to knock off market leader, we're happy to go and invest in it. You know, we'd rather it be us than somebody else. And we're 100% comfortable owning multiple competitors. You know, that's something that we've probably done more than anybody. It's always entertaining to get the sworn enemies in at the same bar together when they're part of the same company, and sharing ideas. But yeah, we're 100% happy to invest in businesses that, you know, may take market share from our existing companies. But even more so, the areas where we haven't been able to penetrate terribly well, the customers we're not serving today, we'd love to go and build businesses from the ground up that can hit those parts of those markets. We know the markets, we have domain expertise. You know, there are just segments that we just haven't hit, right? We don't have a loan origination software product for mortgage brokers. You know, we service the banks directly. So that's just an example of something that would be logical for us.
I've got one for you.
Okay.
Yeah. Excellent. So just, you know, maybe to wrap up here, I really appreciate your time. You've been very gracious. Maybe the last two questions that I'll ask is, in terms of, I mean, you guys are traded on the Toronto Stock Exchange, is that correct?
Yes, we are.
Okay. So in terms of your access to capital or deal size, if you want to inform anyone about that, like, you know, if there's a range you don't go down to, or a range you don't go above, let us know. But beyond that, if somebody wants to reach out, you know, and engage with you, is there a URL or a website? By the way, the link below is the link to their pricing strategy of existing businesses. So thanks for giving us that link, Tom. But you know, where do you want folks to go to engage
Sure.
with you? I don't want them to blow up your LinkedIn.
Yeah, no, I appreciate that. And you know, we are focused on really initially that seed round. We've got a business right now internally that someone is stepping out of one of our existing businesses and is starting from scratch. And which is a bit funny, because that's the polar opposite from what we normally do, right? We've kind of started at the other end, but we really do, you know, want to focus initially on starting things from scratch, or, you know, they're not too far along in the process, not too far down the path of getting to profitability. We do plan to put a process together where each month we have a pitch meeting, and you can fill out a form online, and it'll show you in more detail the criteria. We'll do more of these pitch meetings if we have more demand, and we'll do less if we have less. We think it's going to start out being monthly. So we don't have that up and running yet, but we do hope to get that up and running in the next month or so. In the meantime, you can email Aaron Goodman. I'll share his email address with you. Maybe you can attach it. He's one of our business development
And we'll
managers.
put a form up.
Okay, yeah, that'd be great.
Yeah.
And that'll be the place we can capture them, probably imperfectly until we get our more perfect process in place.
Good. Well, it's an exciting year. You know, we recognized all of your great efforts last year. I think you know, in our private client publications, we talked about, you know, your work, the work of Inside Real Estate, the work of Lone Wolf, the work of Elm Street. You know, all of you guys have been sincere contributors to our industry and continue to invest in our industry, and we're certainly grateful for that. And I kind of like the model too. You know, we have companies that we work with that go the sort of the incubator route through like a Modern Ventures or Second Century Ventures or things like that, which characteristically is quite a bit different than what you guys are doing. So it's great to have such a flourishing array of opportunities for young businesses. And I really appreciate you spending some time to talk about yours.
Well, we're really excited, and we're really excited about the ramifications of this venture investment activity on our mature businesses as well, because we'd like them to be better investors in their businesses and to improve the organic growth, which is to the benefit of our clients.
Excellent. All right. Well, thank you very much. Happy New Year, and we'll see you again very soon.
Okay, thanks a lot, Victor.
Yeah.